Peter Rose, Longwood Currency Trading. Good morning. It's a cold, early October 2022 morning, and I wanted to get this video out to you because I'm getting some comments and emails and stuff about my reckless trading principles. In the last video, I talked about doing a quick trade in the Baltimore airport, made $900, and then got back and was got involved in a trade and was significantly underwater, but I ended up making $5,000 on the next trade. And I guess the misconception here is that these large underwater positions that I'm taking, being criticized for that, for all the stuff that I talk about on my videos about short, about short initial entry stops. Okay, so look, I had a $30,000 month in February profit. That's the second time now I've had a $30,000 profit. The other one was back in June. I did a video on that one. Those are extraordinary results, particularly for the size of the bank that I have. Even though I'm well into six figures in my trading, I don't trade the whole amount of money available. I might trade 15 or 20 lots of that or something like that. But I always like to keep some dry powder. And the reason I keep the dry powder, particularly in times of high volatility like this, is because I don't use a stop. You can't use a stop if you're going to trade in volatile situations. I don't advise anybody trading in volatile situations. I've been looking at the currency markets since 2007. I had a 40-year career as a small real estate investor, and I've got a lot of background in finance, so that I'm taking large risks but are appropriate for the skill level I think that I have at this particular time. Now, if I get it wrong, I could very easily lose way too much money for that as a result of that. The hope is that there will be few times that I'm caught with these large drawdowns. Now, I've only had 2 losing days, and maybe 3, I forget what it is, in 2022 so far. And I've only really been trading for 7 months. I didn't trade January and February because I had carry trades. Those carry trades were severely underwater. I waited until March. I closed them out and did pretty good on the I think I did 6 or 8% in March on my risk that I had. So I think that I don't think that's luck. I think there's skill there in keeping me out of recognizing these really large running underwater positions, these large losses. They're not losses, they're underwater positions. You have to judge the amount that you're willing to lose by your win-to-loss ratio, your average win value, and your per-trade expectation value. Those are incredibly important metrics, and it's all about the math. And so from a statistical standpoint, I'm all set if I was to take, for example, a $20,000 or $30,000 hit. That would take a large chunk of my yearly profit so far, but it would still leave me, if I just stopped trading, with a far better return than I could get in anything else that's out there, including real estate. And so I'm willing to do that because I'm basing this on my skill level to be able to push the envelope in these high volatility times. These are historic times, as I said in the last video, we had a degradation of the pound versus the dollar of over 900 pips in 2 days. And you want to take advantage of those times if you have the skill to do that. A couple of years ago when I was trading, we'd go into periods like this, I'd just shut it down and walk away because I didn't have that skill to handle those really high volatile positions. I didn't have the confidence that I wanted to risk a 3 or 6 lot position with only trading 3 to 6 lots coming out of minis and full lots, and then going to 3 to 6 lots and saying, do I really want to take that hit? Part of that is because as you're coming up in your increasing in your size, you're trading I don't know, 5 minis or a lot or 2 full lots or whatever that is. So you set a 10 pip risk on a 2 full lot, so you're playing by 20 bucks a pip, you lose 200 bucks. If you're all of a sudden trading 8 lots and you have that same 10 pip thing, now you're $800 underwater. So you could have won 4 or 5 times at the 3 lot level or the 2 lot level and get completely wiped out of that in one trade at the 8 lot level. So as I've said in other videos, I've tried to help you with, try to prepare you for moving from the lower 4 and 5 figure account sizes up into the point where you're trading upper 5 figures and 6 figure accounts. Life changes because the dollar value is so much more dramatic. In the beginning, you trade by pips because that keeps you safe because you're all in, all out. I got a 10 pip stop. I take a 10 pip profit. I'm a wash. Or I take a 10 pip stop and I make a 15 pip profit. I'm a 60-40 trader. I'm well ahead of the game. But when you get to the larger bank sizes, you have so much more flexibility in the way that you want to trade. The trade that I made the $900 for, and that I talked about in my last video, I was sitting in the airport in Baltimore waiting for a transfer flight so that my wife and I could get to Chicago. I saw this opportunity coming on. I put the trade on, and when I got off the plane, I'd made $900, but that certainly wasn't with 6 figures. Okay. But the 6 figures gives me the ability to trade smaller account sizes. Like maybe I'll do a 1 lot, maybe I'll do a 3 lot, maybe I'll do a 20 lot. I have that flexibility. And so when I have a position that's moving in profit, I'm going to back the truck up and I'm going to load it all in, and I'm going to carefully manage that position so that I understand it's going to come back against me. I just don't want to have my position set up so that it comes back against me and takes all of my profit and puts me in a negative position. I don't mind losing profit. I just want to have some profit left over for the effort of taking the trade and then going in and maximizing the account. So when I do that, as soon as I get a winner and it runs and it gets to what I thought was pretty close to my target value and the momentum is high, I'm going to load everything I've got into it at that point. I'm not going to try to stagger stuff in over the next 40 pips, because if I do that, I'm moving my average cost closer to my current price. And so that's where I sort of excel in being able to do that. When you're doing your entry-level stuff and you're getting involved in this stuff and you're starting to do that staging, if it goes against you right there, now you have to make a decision. Am I going to short stop out, but I've lost 3 times more money because I've already added to the position? Or do I just let the retracement run its course and then add more to it as it comes up toward that take point, bringing, again, that time you want your average price closer to the current price, because then you have less distance to travel to I mean, that's managing your position to get out of jail, right? Sometimes it doesn't work. I'm in a position right now where that sometimes it doesn't work. That's the case, and I'm significantly underwater. It could be if I took my loss right now, it'd be the biggest loss that I've ever had. But I got myself into it because I'm looking at this volatility, I'm looking at this opportunity, and I'm saying, I want to be in there, I want to try. And if I fail, the idea wasn't to lose as significantly underwater as I am now, but as you increasingly get underwater, you have to say, how much am I willing to lose? And that's based on, well, I know there's a Tom Howgard out there who's a high stakes trader, and he's made millions of dollars, but he's also willing to wipe out an account and lose that account when it doesn't work out for him. And the reason for that is the same reason that I have, is we have confidence in ourselves that we'll be able to make that back. If you're a 70-30 trader, win-loss, and you have a good win value, you're going to be able to make those big losses back because you've got a lot of money to make them back. You can't do that when you're all in, all out with a 2-lot account size. You can't. You're really stuck. You really have to be building your skill set. And that's why when I work with somebody, you got to go all the way back to square one and learn these foundationing principles of trading so that when you get to the larger lot sizes, you can take advantage of those lots. You can't just say, oh, I'm trading a 3-lot right now. I'm all in 3 lots. I'm all out at the position. Oh, now I'm trading 20 lots. I'll go 20 lots all in and 20 lots all out because it's just moving the decimal point. No, it isn't like that. Because when you lose 20 pips on at 200 pips, $200 a pip, I mean, geez, that's a lot of money to lose. And so you have to break the trade down, and that's where you've become sort of an expert at entry analysis, and now you're working on sharpening your skills in position management. When you're trading down at the lower bank levels, the 4 and low 5-figure account sizes, you don't have any position management. It's all about entry level, because if you get your entry level wrong, you're stopped, okay? When you have larger bank sizes, you have a good entry level, a good probability that you're going to go to your first lock point on your stop, so that you're at least break even on the trade, and then you can manage the thing from there. And then it's only a matter of skill in managing the trade as to how much money you make. But you can still get into trouble as to when you back the truck up and load up that position. That's the situation I'm in now. I got my timing wrong because the volatility is there. I know where I think I know where the momentum is going. But the volatility is all over the place. And at the size that I'm working on, a half a dozen, 10, 20 pips is $3,000 or $4,000. So what am I going to do? I'm going to swap the trade because I'm $4 or $5 or $8 or $10,000 down. It's only 15 pips or something like that. So if you were all in, all out, and you were 15 pips behind, you wouldn't even hit your entry stop yet. So everything is relative to the bank size that you're trading and to the amount of experience that you have in doing that trading. And so when you're listening to my videos, I'm trying to work with you in that 4 and low 5-figure account size as to what to do so that when you get to the larger account sizes, you'll be able to do the stuff that I'm doing now successfully. And so you have to be able, in watching my stuff, to be able to differentiate between whether I'm working with you at the 4 and the 5-figure account level size, or if you're already at 6 figures, but you're not having the success that you should have. Look back as to how to build a solid structural foundation under your trading. And then you'll be much better off. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.